Hello traders, you're welcome to this video and I especially welcome you back to the channel. In this video, we are going to be discussing the linear regression channel indicator. Okay, we're going to be discussing the linear regression channel indicator. So if you are looking for a powerful tool to analyze Forex market trends and make informed trading decisions, then you are in the right place. The Forex Geek channel is for you. Now I'm just going to be adding the indicator to the chart, the linear regression channel indicator. Note that this is a custom indicator, so if you do not have the indicator yet, you will need to download the indicator from a reputable source online, after which you will then add the indicator file to your indicators library for the MetaTrader terminal. And after that, you will have to relaunch or restart the terminal before you can then add the indicator to the chart. So this is how the indicator looks like, the linear regression channel indicator. Basically, this indicator serves as dynamic support and resistance levels. Okay, so the indicator will help you to identify potential reversal points in a trend. Okay, the slopes of the channel determines the direction of the trend. Basically, if the channel is sloping upward, it shows that it's a bullish trend. If it's sloping downward, it shows that it's a bearish trend. Okay, so when you have the linear regression channel indicator sloping upwards, please focus mostly on buy trades. All right, remember that if the momentum in the market is very strong, if we are in a buy trend and the bullish momentum is very strong, you could have breakouts. So do not assume that when the price gets to the highest resistance or when the price gets to the red line, whichever of the red lines, it could be the middle or the top, do not assume that a reversal will quickly occur, because depending on how strong that momentum is, how strong the momentum in that trend is, we could have long moves and lots of breakouts. So basically, look for only trades in the direction of the trend. So how do you make use of this indicator? Each of these levels represents potential reversal points. Note that these levels do not guarantee a reversal. All right, no indicator guarantees anything. These levels only tell you that price could possibly reverse. Okay, so if the price pulls back, what you have to do before you enter a trade is get confirmation. It's as easy as that. For example, the price got close to this uppermost line, which was serving as a resistance, and we had a pullback. This is a bullish trend, right? We had a pullback, quite all right. Now, we wouldn't have been sure if this pullback will end here or end here or here or here or here. So what we would have just done was to wait for a bullish confirmation. The bullish confirmation could come in form of bullish candlestick pattern, or we can add a moving average. For example, we can add a moving average to confirm. We can use perhaps the 20 EMA. The 20 EMA will work well. We can use the 20 EMA, for example, to confirm the reversal, in addition to any bullish candlestick pattern that forms. So in this case, we had a long bear candle. We had a bull candle that couldn't even rise to the top of this bear candle. So this is not good enough. We had another bear candle, and then we finally had a bullish engulfing. This is a bullish engulfing because it covers the body of the cell, right? So this would have been a good place to enter a buy. Okay, but because of the nature of this move, right, it shows as if there was strong bearish momentum. In this case, what I would recommend is exit at the nearest line. Do not wait for the price to get to the top. Just exit at the nearest line. So if you have entered here and you are setting stop loss below this candlestick pattern, you wouldn't have exactly gotten a good risk to reward ratio. You would have gotten a risk to reward ratio of almost 1 to 1. So it's not exactly the best trade. So I would recommend to exit, or to stay away rather. I would recommend to stay away from this trade. It's better to get a very clear trend, all right, before proceeding. For example, now, in this case, we are having the price come down, and this trend line is serving as a dynamic support in addition to the linear regression channel indicator. So the trend line is going to determine, or the trend line is going to give us a hint as to whether a bullish continuation will occur or if there's going to be a breakout. So there are two things involved. It's either there is a bearish breakout or there is a bullish continuation, right? So this trend line is serving as a confirmation tool in this case, because the linear regression channel has already given us a support level here. This red line is a support level that indicates a possible reversal. So if we have a bullish candlestick pattern form around here, that's going to be a good place to enter a buy, because we are having a confluence around here. All right, we have a confluence around here. Now, if we don't get a bullish candlestick pattern form, it's possible that we are going to have a sell reversal, because you can see that the candle has already dropped below the moving average, right? So this bullish move could possibly be coming to an end for the fact that the candles has dropped below the moving average. Okay, on the other hand, it could be a false breakout. That is the reason why you should always wait for confirmation before making a decision. So it is our confirmation that will determine, it is the next price action that will determine if we are going to buy or sell. If we have a bullish confirmation, we could go ahead to buy, set stop loss below here, and for the take profit, you can target your favorable risk to reward ratio, depending on your risk to reward ratio. This could be a good place to exit, because we are not yet sure if this reversal is confirmed, this bearish reversal, because it looks as if there could be a bearish reversal here, but we are not sure yet if it is confirmed. So if you find a bullish candlestick pattern, I would recommend exiting somewhere around here, somewhere that is not at this high. Okay, in case of if a bearish structure is forming, because you can see this is possibly a bearish structure forming already. So in case of if there's going to be a lower low, a lower high, then this would be an ideal place to exit your buy. But as we can see, a symmetrical triangle pattern is already forming. This is a symmetrical triangle pattern. So I would even recommend not entering any trade yet until we have a clear direction. All right. Remember that not trading is also a wise decision. Okay. It's not every time that you should enter the market, right? Sometimes are not favorable. So in this situation, the direction is not clear. We could have a bearish breakout, we could have a bullish breakout, we're not sure, and we're having a symmetrical triangle pattern forming. So this is not clear, so we just have to wait for a breakout, either in the upward direction or in the downward direction. But basically, what you should know is that the linear regression channel indicator gives us possible reversal points. All right, that is just how to use the indicator, but make sure you always get your confirmation. That is the emphasis. Make sure you always get your confirmation before entering your trade. So that is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights. Thank you for watching. See you in the next video.